Is there a super bubble in store for the commodity space? Our next guest doesn't think much regarding the recent strength of the US dollar, but is optimistic about the precious metal space. Doug Casey is my guest today on The Spot. Doug, thanks for being with us.
Well, much appreciated, Daniela.
Doug, let's start by talking about the recent strength of the U.S. dollar. It's obviously an understatement to say it's had a pretty good run as we end off the year. Doug, in the past, I know we've spoken about U.S. government policies and how they may actually end up hurting the dollar in the long run. Have you since changed your stance given the rally of the U.S. dollar? How do you see things here?
Well, all markets are cyclical. Nothing goes straight down. Even the Zimbabwe dollar had times when it ran up. So it's a normal function of the market for things to fluctuate for all kinds of reasons. People need dollars to pay their debts. And as indebted as most of the world is right now, there's an occasional scramble for dollars, which is the currency most used for paying debts. So it's not a change in the long-term trend, and in fact, I expect the long-term trend to accelerate, unless, of course, we have a catastrophic deflation, which is entirely possible. If people are unable to pay their debts and bonds are defaulted on, that would mean billions or trillions of funny money is wiped out with the bonds disappearing. If the stock market crashes and trillions more is lost that way, if the real estate market crashes, you could have a catastrophic deflation of the dollar. It could become temporarily worth more, but then the government would redouble its efforts to print money in the false hope that it's going to stimulate real economic activity.
Doug, I spoke with Jim Rickards, the author of Currency Wars and the Death of Money, earlier in the week, and he was explaining to me how he feels the high dollar is not sustainable and, in fact, the Fed's worst nightmare. How long do you see this U.S. dollar rally going for, Doug? Is it just a short-term bump or a long-term rally for the U.S. dollar?
It's unpredictable, but I'll say this. I would take advantage of the dollar's strength to move out of it and into other things, in particular, gold. At $1,200 an ounce, it's a fantastic bargain. Not as great a bargain as it was back in 2001 when it was $260 an ounce, but with the debasement of the dollar in those intervening 12 or 13 years, it's the equivalent of about $500 an ounce back in 2001. So it's not a screaming giveaway bargain, but gold is an excellent bargain today. And the same is true of platinum, I've got to say. And the same is true of silver, all of the precious metals.
I recently interviewed the president of Iceland, who shared with me how the country recovered from their financial crisis. Do you feel that there's anything America can learn from the methods Iceland took?
They should move more in that direction. But as you know, Daniela, I don't believe that the Federal Reserve, America's central bank, serves a useful purpose. It should be abolished. And gold, or some other commodity, but most likely gold, should be used as a medium of exchange and store of value. We don't need a government-mandated political football that can be created arbitrarily with keystrokes to serve as the medium that people save in. So I don't like to talk about what the Fed should do, because I don't think the Fed should exist.
Doug, let's talk mining stocks now. I know you've been optimistic on them in the past. You've also called for a super bubble in mining stocks. Now, given the recent hit they took, when do you foresee a rally here for mining stocks?
Well, I'm of the opinion that we're bottoming right now in most of the commodities, and I think we're at the bottom in these mining stocks. Now, mining is a horrible business. It always has been, and it's getting worse in many ways. But the stocks are so cheap right now that you have to buy them. And the thing to remember is that the world needs more copper. It needs more gold, more nickel, more uranium, all of these things, even though they're becoming harder and harder to mine. The mining stocks are very out of favor. And as we speak at this time, the potential exists for them to go 10 to 1 from here. And one of the things that's going to cause that is as the Federal Reserve continues to create billions, trillions more dollars, they're going to create more bubbles. And there's going to be a bubble in commodities and probably a super bubble in the companies that mine and explore for those commodities. So I'm very bullish right now.
Now, Doug, finally, to wrap up, you're a keynote presenter at the Grand Cayman Liberty Forum happening November 16th to the 20th. Kitco News will be covering the event. I encourage our viewers to register and join us and come on out and meet you and the Kitco News team. What will be your message to investors and attendees?
Well, I'll be able to go into a lot of things in detail that we can't in a short interview like we're doing now. And I look forward to talking to people individually. And I urge people to come to that Cayman program because not only are there going to be a lot of good speakers there, but it's the time of year when you want to go to Cayman. If you haven't been there, it's a great place. And get out of the northern cold. So there's every reason to go.
Thanks, Doug. We look forward to seeing you there. And thank you for watching this edition of On the Spot with Doug Casey. You can email us. We'd love to hear from you at newsfeedback@kitco.com. Happy Thursday.